Okay, good morning, everybody, and welcome to this Fubon Center interview. I'm Kathleen DeRose, and I'm the director of the Fubon Center for Technology, Business, and Innovation. And I'm absolutely delighted to be here today with Professor David Yermack. So Professor Yermack is the Albert Fingerhut Professor of Business and Transformation. He's the chair of the Finance Department of the Stern School of Business, and he's a Fubon Research Scholar. Fubon Research Scholars are known for their contribution not only to their own field, but also to interdisciplinary research. And Professor Yermack teaches one of the most popular courses on blockchain and has contributed largely to the thinking about blockchain and Bitcoin. Welcome, Professor Yermack.
Thank you very much, Kathleen.
So I was reviewing your first paper on Bitcoin, which dates from 2015. And this did many important things. So it not only set the academic context for Bitcoin and blockchain, but it also described some of the implications for research and for the commercial world. And importantly, I think, identified some of the shortcomings in Bitcoin and created a halo for the research to come. So my first question for you is, what gave you the inspiration to pursue blockchain and Bitcoin as a research area? How did that all get started?
You know, it's an unusual path that I took, but I had taken a high school course in protest literature. There's a novel by Thomas Pynchon called The Crying of Lot 49 about a secret underground post office that is started by a bunch of libertarians, and they have secret signs, and the whole thing kind of works off the grid. And I read about Bitcoin in the media, maybe 2011, 2012, and I immediately connected it back to this high school course. And I said, this is just like Thomas Pynchon's novel, except it's not a post office, it's a bank. But you know, really the same kind of people with the same motivations. And as I looked at it more closely, I was really amazed it stayed in equilibrium, that the incentives and the overall design of it was stable. It didn't just blow itself up or go to zero. And it began to, really provoke questions about monetary policy when you have the money supply, really with a computer algorithm replacing the Board of Governors of the Federal Reserve. This connects very quickly to some age-old debates about central banking. And so I paid attention to this, and it began to grow in its presence in the media. And after a while, it just seemed like somebody had to study this academically. And I said, I'm not an expert on this, but nobody else is either. Nobody's gone into this and taken it seriously. So I decided, to take a flyer and, give a couple of talks, write a little bit about it, and I was amazed at the response, the uptake that this generated.
Well, you interestingly point out the sort of political wellspring that Bitcoin, even in its early encoding, literally posed a challenge to existing institutions and stakeholders. And I'm wondering if you could revisit some of the conclusions of that first paper, that Bitcoin was likely to become more of a speculative asset. Fast forward, that looks very prescient. What do you think today, given Bitcoin's both and other cryptocurrencies wider adoption, but also still extreme volatility?
Yeah, Bitcoin is not suitable as a currency. It has extremely high volatility. It is not socially adopted in the sense that people don't quote the prices of goods in Bitcoin, even in situations where it might be widely used. And it's really something where the data suggests much more interest from speculators than for people using it for routine payments. If you get under the hood and understand the technology, you realize only 4 people per second can use the network worldwide, and that's an enormous bottleneck. So what I've concluded over time, and this is partly the first paper I wrote, but even more from teaching and meeting people in industry, is that the technology in Bitcoin is extremely immature, that it lays down a template and many others have built better systems on top of it. Today, Bitcoin has a first mover advantage that gives it a lot of presence in public consciousness, but I think increasingly it's going to be vulnerable to being overtaken by the more sophisticated platforms that deal with some of these scaling issues and ultimately are going to be much more suitable for payments.
And you're thinking specifically about Ether and other things that are more scalable, or are there other things that you had in mind?
Even Ether is beginning to look a little bit dated. There's, new innovation. I think the half-life of this technology may be less than a year. Mm-hmm. The one everyone's talking about at the moment is Solana. Mm-hmm. 6 months ago it was Cardano, but there's so many smart entrepreneurs in this area that I think the blockchain technology is going to continue to progress. It's going to resemble in my opinion, the browser wars. That, if you were an early adopter of the World Wide Web, you went through Netscape Navigator, and there was Internet Explorer, many generations of browsers, each of them sunsetting about 2 years after they were launched because something better came along.
Right.
And I think what's interesting about a lot of the crypto is the connection back to sovereign money with the stable coins. That a lot of the promoters have found it convenient to adopt the unit of account, typically the US dollar, that is controlled, in fact, by the central bank, but they are creating money completely independently of that. And it's raised really an interesting problem for the United States, that it becomes the world monetary unit, but with no control over the actual creation and the supply of units of payment and so forth. And we seem to be moving really quite quickly in that direction.
Yeah, you point out importantly in some of your follow-on papers this exact threat and challenge posed to central bank authority over monetary policy, among other things. And specifically, you talk about kind of the disciplinary effects and the monopoly on the printing press posed by blockchain-based currencies in places where that might be quite important. And I'm wondering if you could just share with us some of your insights about kind of the typology of some of these different coins that developed, and then their utility in certain of these other contexts, whether it's the United States, China, or some of the countries that have adopted Bitcoin as a substitute.
Yeah, I think the great success story is in China, where you've had two social media platforms, Alipay and WeChat Pay, essentially usurp from the central bank the privilege of coining money. And this only years later became obvious to the wise dictator at the top of the pyramid in China that Jack Ma was more important than he was. Mm-hmm. And the Chinese are now, of course, retaliating with their own central bank digital currency that is probably going to be something of a roadmap for other countries to follow. But who controls the money supply right now in China is really the social media companies, with the government. Even an authoritarian government is vulnerable to losing this control very quickly. But you've had other countries where almost out of necessity, the banking system fails completely, but the Bitcoin network is available, at least for remittances and transfers from abroad and for a certain degree of local activity. So Zimbabwe and Venezuela have gone through this. It's interesting that organically now, some of the middle-class economies in Africa, especially Nigeria, are beginning to see some bottom-up demand and transaction use of Bitcoin as an alternative to the government currency. And El Salvador has launched this very unusual experiment where they simply declared Bitcoin legal tender, told all the shops that they had to accept it, distributed a lot of hardware, and then threw the switch on September 7th, and promptly the local system crashed, not unexpectedly due to demand. But to see a government embrace Bitcoin, I think it's astonishing. The creators of Bitcoin 13 years ago couldn't have imagined this. And so much has gone on just in the last 12 months that one wonders what the next steps are. And there's clearly a technology that's here to stay that will interact in probably unexpected ways with the central banks themselves, but certainly has reached a point where governments can't dismiss it or ignore it. In fact, if they underestimate this, I think they do it at their own risk, that this is, in some ways a mortal threat to the control over the money supply, the ability of governments to finance themselves with the printing press, as they like to do.
Yeah, no, you've very, very eloquently pointed out the different strategies pursued by central banks around the world to respond to this threat, whether it's, banning it outright or adopting Bitcoin directly or co-opting it somehow through the introduction of something like a Fed coin. How do you think the U.S. will solve this problem?
The U.S. is unique because we export hard currency. The suitcase of $100 bills is the preferred vehicle for money laundering. Mm-hmm. And there are literally trillions of U.S. paper dollars abroad being used by drug dealers and Russian mobsters and petro sheiks, just all kinds of people who want to hide money from the financial system. So this gives us huge incentives as a nation to continue printing the physical currency and resist the introduction of a digital dollar. In some ways, this is our one and only true export from the United States, is the greenback. Yeah. But I think inevitably the sun will set on this franchise, and there's a great risk being posed first by China, but now the European Central Bank, really all the major banks in the world are finally coming around to this technology, and I don't think the U.S. is going to be able to sit this one out. So you'll see a digital dollar probably hot on the heels of many of these others.
Yeah, it seems inevitable given this is now competitive.
Yeah.
And so this export franchise that we have is getting challenged as we speak. Yeah, yeah. So you are an advocate then, or a believer that this is mainstreaming from the standpoint of actually just business conditions, policy, and then that also implies being swept into the regulatory regime that we have. How do you see that unfolding? Will we just simply replicate the same rules we have and impose them on folks like Coinbase, which is in the press recently, or is there some other formula that would be effective here?
Yeah, this is a real problem. The instincts of the regulators in Washington, they kind of go through the 7 stages of denial and ignorance and ridicule and so forth. But where they really seem to have arrived is at the belief that we already have laws for payments, for remittances. We have laws for raising capital, and we can just take those laws off the shelf with the agencies that are already in place and let them do their job and things will be fine. I don't think it's going to work because many of these are decentralized platforms with no leadership. They're not run by people, they're run by computer programs. They're not physically located anywhere, and we don't really even know who writes the code or who the customers are. So I don't think the regulatory scheme that's now in place is going to last very long. And I'm not sure that we have the imagination to know what should replace it. I think there's a long road ahead. I'm preparing some slides right now for a future lecture on this, and I'm going to begin with the observation that the Buttonwood Tree Agreement that started the New York Stock Exchange was in 1789, and then the Securities and Exchange Commission is founded in 1934, which is, I think, 145 years later. So maybe early in the 22nd century, we might bring together a regulatory scheme, but it may not be in our lifetimes. And I think this is a massive challenge for regulators all around the world, really, but the U.S. has been particularly reactionary and close-minded and let other countries, I think especially Singapore, the Emirates, the Swiss, and some of the European nations are really doing a much better job in acknowledging the strengths and weaknesses of the technology and reimagining how it should be regulated.
So this implies a certain amount of uncertainty that we'll be living with from a regulatory standpoint. And in addition to the many credentials mentioned at the beginning, you actually have a legal background and a policy and governance background. And if you're sitting in either a commercial institution or one affected by policy of any kind, what do you think the hotspots are going to be that will test the waters? We've already seen a couple. You wrote about one of them, ICOs, from a few years ago, or initial coin offerings. We have the Coinbase and Binance challenge on the table today. Are there other hotspots that researchers might focus on for the formation of some of these improved plans and thoughts about how to regulate these novel industries?
It's very clear that right now the focus is on DeFi, or decentralized finance. And frankly, people who've paid attention would have seen this coming for years, that the whole point of the Ethereum platform and the web of smart contracts was to enable these kinds of platforms that essentially on autopilot will do margin lending, custody, all kinds of fairly routine financial services, but again, without people in charge and without any kind of central node that can be held accountable. So there are vast problems in collecting taxes, dealing with money laundering and so forth on these platforms. And I think that the regulatory focus has almost certainly got to go in this direction. But at the same time, the irony is that the blockchain collects data and allows you to sweep in the footprints of people, and in many ways is a dream for the regulator as an investigative tool. It's simply that the progress has really come in the private sector, with firms doing forensics like Chainalysis right here in Union Square in New York, who are now becoming value-added service vendors to the government. And I think the government's going to have to lean for expertise, it's going to lean very hard on some of these private companies. But it will raise interesting questions about when the private vendor refuses to work for the government because of privacy issues or political slant of the regulation being pursued. I think those kinds of conflicts, they may already be happening, but they're certainly not far off on the horizon. But it amounts, really to a privatization of regulation unintentional perhaps, but this is the old University of Chicago model, that governments shouldn't regulate things, that regulation will come up due to supply and demand from the people in the market, and it's best done by the private sector. We're seeing a real revival of many of the ideas of Hayek and others, which academics love to see this stuff come out of the closet and begin arguing about some of the classics again. I think for the regulator, it's extremely uncomfortable, though.
Yeah, it's interesting that you raise Hayek and others, because there's been kind of an emerging counter threat to that, notably by the paper written by the researcher at Yale about how to handle these large tech platforms and how they're at some point anti-competitive because of their far and wide reach, and that the standard for cheaper prices, more accessibility, transparency is insufficient. And so this is an interesting competition too for how to think about this. And it sounds like we're going to be living with a fair amount of uncertainty.
Yeah, my colleague Drew Hinkes, who teaches with me, has a slide where he shows all the legislation to regulate the World Wide Web in the last 20 years. The Digital Millennium Copyright Act and many others, which I don't think have been wholly successful. In fact, you now see Twitter being the center of national politics, and fake news, and all kinds of the U.S. Capitol being attacked by people using social media to communicate, that clearly the regulation is not working if we want to prevent overthrow of the U.S. government, just as a very basic step. But we have a lot to learn about this, and I think by teaching this at the university, we can contribute to that. But it really is going to force people to reconsider the relationship between government and business, and where's the right nexus, really, for making decisions about how this stuff gets regulated. I don't think government is likely to be as powerful in the future in the way it's supervised finance for most of the last 100 years. Yeah, so it's really continuing your original idea that this challenges some kind of foundational beliefs or received wisdom about finance. And I think one thing you just raised is the polarizing impact of these self-reinforcing feedback loops that develop from modern technologies. And that may be something that was missed in the early understanding of the web and its potential for this. Mm-hmm. But we have a better understanding of this today. How do you see that playing out in finance? Because it certainly reshaped political markets, if you see politics as markets, and caused division or less overlap among people with competing views. And when you bring that thinking to markets that are now getting reshaped in the same way, it poses some really interesting challenges, as you mentioned. So not only that makes it more difficult to regulate, but for participants, it may be a very interesting and difficult environment if, for example, people are getting their information from a Reddit site about a meme stock rather than reading an annual report like they used to do. We had just 2 days ago this event where somebody put out a press release that Walmart was going to begin accepting Litecoin. Yeah. And the price of Litecoin briefly went up 30%. I'm assuming somebody had stocked up on Litecoin and sold into the manipulation. But what do we do about this? And the action was not with the listed security with Walmart. It was with a crypto coin, and one that is rarely mentioned as a security. So I think there's probably some type of common law fraud here, or wire fraud, that if you could locate the person, you could charge them with. But this is taking us all the way back to the 18th century and bypassing all the financial regulation put in place since then. But if I'm an investor, I think I'm going to have much more choice about where to trade and how to trade. Typically, you've really had to go to the stock exchange, and there's been one price for every asset. But these markets are open 24/7 around the world. There are very interesting differences in the regional prices and costs of trading. Arbitrage is much more difficult, and I think technology will probably fix that over time. But I don't think we can really think in terms of a single market price, and the notion of liquidity is going to have to be measured really quite differently. Academics are going to love this. It's going to just create a torrent of data and allow us to go back and revisit some of the foundational assumptions. But I think for people in the real world, it's going to be very confusing. And there's going to be a huge rate of return to being informed and educating yourself about the technology, learning about the weak spots, the openings, and also the pitfalls. Yeah, it's interesting that you mentioned the trading aspect, because that was sort of one of the original ironies of cryptocurrency trading, that it was massively inefficient and continues to be, that you've got different prices for the same thing around different places, violating the law of one price and these kind of core fundamental principles that we all believe in. And I guess that does present opportunity for hedge funds seeking a profit,
but also confusion. And it almost like we're almost going backwards in time then, away from efficient markets and some of these kind of core assumptions, which makes it interesting.
Yeah, you can see this in the debate over whether the SEC in Washington should approve an exchange-traded fund for Bitcoin.
Yes. Mm-hmm.
And I think the first application was from the Winklevoss twins, maybe as early as 2013. Yeah, it's like an 8-year-old fight now.
Yeah.
But the whole point of an ETF is that it enables price discovery.
Yes.
You know, that if such a product were listed, you wouldn't have these arbitrage opportunities in the way that you see them today. The markets would become much more efficient, which I think is something the SEC wishes to promote. And what's happened now is that these things are available in Canada and Western Europe.
Right.
And so you're beginning to see capital flight from the US markets. And maybe this makes the SEC happy, like take your business to Canada, let them worry about it. But I think that's a very bad attitude. We want to host these markets in the US. And you've seen a lot of cases where the regulators have held back the price discovery and the liquidity and the progress of the markets. You know, probably the most outrageous was the BIT license here in New York. Which is just incredible regulatory overreach that just scared people right out of the city, and was really just a huge mistake in hindsight. Although they're not going to admit that.
No, it's interesting because I think that was the license used by, if I'm right, Paxos, when they partnered with PayPal in order to kick off crypto payments on the PayPal platform. So it was the only route in, I guess, to legitimize yourself at that time.
In New York.
In New York.
But there's 49 other states and 200 other countries.
Yeah,
and we've had this little region called Silicon Alley just adjacent to the university, but I think they've done their best in the state of New York to strangle it in the crib. And it's interesting, though, that people are not necessarily going to Silicon Valley. They're going to the Crypto Valley in Switzerland.
Right,
that there's a lot of very interesting regulatory competition going on. And within the U.S., you've got the 50 states. Wyoming has been particularly aggressive about putting statutes out that are quite different from the federal laws that people think are relevant to this. But this really speaks to the uncertainty and the confusion that I think for the next few decades is almost inevitable, given how novel the technology is and how quickly it continues to change itself.
What do you think are the most imperative research areas looking forward? You were so prescient in the past, and for the next 5 years, are there areas that you think are particularly exciting to focus on as a researcher and particularly important for our community and people here at Stern to understand?
The one that really I thought was important from the beginning, and now it's really coming into the forefront, is the role of central banking. I'm not sure that central banks have a chance in the future to compete not only with these independent, autonomous currencies like Bitcoin, but even more so with the social media platforms. There are such advantages that Google and Amazon and in the Far East, Ant Financial and Alipay and WeChat have. They have billions of customers. They're much better at consumer engagement and retention. Their technology is way better. And as creators of money, I don't think they're going to be seriously opposed by central banks. That the central banks are going to have to reach an accommodation with the media companies. We are moving very rapidly away from a system of deposit-taking branch banking with fractional reserve lending. And it's much more of a payments-focused system where the float enjoyed by a vendor like Amazon can amount to tens of trillions of dollars if they manage it the right way. And it serves as a base for monetary creation that we've already seen this movie in China with Ant Financial, and they're now trying to break Ant Financial up and turn back the clock. But I think this is hugely exciting, and if done well, there's an opportunity to make the economy perform better. But one of the obvious side effects is that Congress will actually have to collect taxes for all the money it wants to spend. And the ability to finance the government, there's really just two ways to collect taxes or print money. And I think the social media companies are already taking away the ability to print the money. I can't imagine a more important research question than this about the future of central banking and money creation, which goes really to the heart of what sovereign governments do and how economies perform. And the other one that I think is obvious, we mentioned already, is decentralized finance. that this is not only a puzzle for the regulator, but hugely threatening to the Morgan Stanleys and Citigroups. You know, it raises many questions about why we would need them in the future. And it's already been predicted by a lot of the mainstream consulting firms that the number of traditional banks and so forth is going to shrink precipitously. And this is a very interesting thing to study as well. It causes us a few problems in where to place our graduates. And, you know, many of the jobs that we train students for are quickly vanishing. But again, there's opportunity, because if we can do this better than other business schools, we'll move up in the rankings. And I think there's some evidence that this is already happening.
Yeah, no, I think that's just an amazing point to end this conversation on, because as you point out, this is transforming business school education as well as research, and you've just been a huge contributor to that. So thank you so much for sitting here and sharing today all your insights from the past and the present and the future, and I think they'll be found very useful by everyone listening to this. So thank you very much.
Thank you very much.